Thank you for joining us today on our webcast. We are going to be discussing with our speakers, who I will introduce shortly, a discussion centered on what emerging managers can do to help their current fund or their forthcoming fund set themselves apart and be successful from both an operational and investor perspective. Fund managers that set realistic goals in all areas of their launch will be best positioned to attract investors and grow their assets under management. Unfortunately, too many times managers underestimate the costs associated with the fund launch and subsequent operational expenses, and they don't factor in the number of providers and their associated costs that are critical for a successful launch. Yet, they're overly confident in their capital raising abilities, oftentimes not having a capital raising and marketing strategy in place prior to launch. Along these lines, that's why I wanted to bring in our two speakers today. First, we have Daniel Strackman. He's been working on Wall Street for more than 20 years in various capacities, including investment management, institutional brokerage, insurance, hedge fund, and mutual fund product development, marketing, and distribution. He currently serves as managing director of A&C Advisors LLC, which is a firm that provides professional directors and governance services to the investment management industry. Dan serves as director to both onshore and offshore investment vehicles and is a registered director under the Directors Registration and Licensing Law 2014 of the Cayman Islands. He's the co-founder of the hedgeanswers.com online community and co-founder of the Operations for Alternatives event series. He's also authored 9 books on investment management, including The Fundamentals of Hedge Fund Management and Getting Started in Hedge Funds. And I will have his contact information available for our listeners following this. So Dan, thank you for being here. I really appreciate it.
Oh, thank you. And I appreciate the way you read the bio. It's great. My mom would be really proud to hear that. So thank you. That's great. That's great.
Perfect.
That's great.
Kelly, I want to get to Kelly Ferraro. She's our other speaker that we have today. Kelly's the founder and principal of KAF Communications LLC, and she has over 2 decades of experience identifying and creating actionable communications plans and has worked across several industry verticals, which include financial services, fintech, medical technology, and real estate. Prior to her time in public relations and communications, I wanted to touch base that Kelly has worked for large banks and financial institutions, which include Bank of America, Guggenheim Partners, and she was formerly held her Series 7, 24, and 63 licenses. And so, I think that makes her very well versed in crafting strategies for public companies. In 2018, Kelly started KAF Communications, and just really wanted to make her own boutique style where she could better align herself with clients as a partner and what she likes to call an in-house extension. She works in areas such as strategic media relations, brand development, thought leadership, and really helps companies foster disruption and better solutions to some common and age-old problems. So her clients include real estate developers and brokers, medical technology companies, and individuals that have built businesses single-handedly and want to seek coverage about their successes. Kelly, I appreciate you being here. I know you're especially passionate about working with emerging managers, given you can kind of help them shape their message from the start.
Yes, thank you so much for having me, Jen. It's a pleasure to be here today.
Perfect. Well, with that, I just want to jump in and get started. I have a few questions that we formulated based on all of our many conversations we have with emerging managers and investors, and really kind of get down to some of the foundations of what it's taking now, in this new environment to really set yourselves apart and be successful, when now we have even more factors that are facing these managers that make it difficult. And with that, Dan, how do you see emerging managers be able to find a balance between budget conscious and engaging providers that will help grow their business? I feel like sometimes it's a push against each other on those where they want to save money, But oftentimes that's a sacrifice with providers that will really help grow along with them.
Yeah. I think that it's a weird balance. I think you're right. I think that at the short end, first of all, there's a myth in the industry, particularly with emerging managers, that if you build it, they'll come and you don't need anybody's help. The reality is you do need help. You need people like Kelly, you need people like your broker dealer, you need people to help you craft a message, craft a good pitch book, craft a good fact sheet, help you with introductions if possible. And I think that right now people, it's not new, but people don't understand the real valuable role that you can, that some service providers can provide to you. And I think, unfortunately, because of a fear of spending money and a fear of, not getting the value that you're buying when you buy a service, people are very short-sighted. But my view on this is a little bit different in that I think if you're afraid to spend the money to hire someone like Kelly to help you with crafting a message or helping with a deck then maybe you should be thinking about not getting in the business, right? Because if you set up a store to sell, clothing, right, you need some inventory, right? You got to have a product to sell to the client or the customers. Maybe that's a bad example today because people are not going shopping. But I think that when you look at your business, you need to look at the cost of legal, which is, Kelly, what you guys provide, the cost of audit and tax, which one of our friends in the industry is going to provide, the cost of administration, which is a real expense. Perhaps you have to pay for your bank account. I don't know. But the other cost is there's expense for marketing. And there's obviously a cost for operations, whether it's office or, however you do it. And I think that really, if you're not willing to, sort of add that line item to your startup budget, it's going to be very tough to be successful. Investors, regardless of how much money they have to allocate or, where they sit on the accredited investor spectrum or qualified purchaser spectrum, are all sophisticated, right? And they're all getting yelled at 24/7, 365 from other managers who want access to their capital, right? So you've got to really think about marketing. You got to think about, having the right materials. You really have to lay out a foundation and strategy that you can execute on to do that. And I think, putting, that should not be something that you spare expense on, because and something I love to tell people is, I say, look, you can have a Ferrari, right? It can be big and beautiful and red and ready to go with a beautiful engine. But if you don't have gasoline to get that engine fired, guess what? Your car is going to sit in the shop. So if you're willing to spend money on legal, willing to spend money on admin, willing to spend money on audit and tax, willing to spend, money on operations to set up an office, that's all great. But if you got no money coming in, then your car has no gasoline and you might as well not, expect to go anywhere.
I love that. I think that's a perfect analogy for it, because that's really true. You've got to invest in yourself.
Sure.
Otherwise, nobody else is going to want to invest in you, because what does that say?
Exactly right.
No, and I couldn't agree more. I always tell people that I work with, whether it be an emerging manager or a startup, you need to put a marketing line in there. And even if you start small and you grow with that person, and there's a lot of different programs that can be allocated, it will help you raise your profile. And if you have the best product in the world but no one knows about it, well, it's kind of like the tree falling in the forest.
Yeah, absolutely. And with that, I know, we've all been listening to so many webcasts and webinars, and the $1 million question we're all hearing and we're all being asked is, today, going forward with the environment, the economy, how things are going to be done, nobody necessarily knows. And what do you think, Dan, is an investor going to want to see from their management team in the future. You know, I know it remains uncertain, but I'd really love to get your thoughts on
Yeah.
what these
Uh,
investors may require that maybe above and beyond what it was coronavirus.
Sure. So as you know, I'm involved with the Investment Management Due Diligence Association, and we are constantly talking to investors of all shapes and sizes, quite frankly. And I think, if we were having this conversation, let's say late March, I'd say that most of the investors that we were talking to are saying things like, well, we're still going to go do on-site visits, and we're still going to go and meet with people in person, and we're going to, test the waters or learn about the organizations that way. Now, here we are, fast forward almost into June, I guess late May. And I think the answer is, look, we have to do real meetings. We're going to need to do, whether they're video, Zoom, however you do it, WebEx. You're going to have to do those kinds of meetings, but and really learn about the strategy, learn about the organization. But I think what investors are really looking for are three things. Number one, that the organization has been able to adapt and operate in this new and can operate in this new environment, right? Where they are, not in the same office, they're not in the same locations, and I think investors are going to, number one, want to see that the systems and the operations are in place, but they've adapted to working in this environment. Number two, they're going to want to look at how the fund is performed or how the fund is expected to perform. We've had incredible amounts of volatility globally over the last 6 months, 6 weeks. And we've seen massive swings up, massive swings down. And, literally the day they say that, on Monday, they say there's a vaccine for coronavirus coming, the market goes up 500 points. And then on Tuesday, they say, well, we don't think it's going to be real. And it goes down 500 points, right? And so I think they want to see how managers are managing volatility and really dealing with this, and how, one of the things that we are really worried about is style and strategy drift. And we're concerned that, because the Fed is coming in and buying corporate debt, and they're, issuing more treasuries than ever, that there may be people looking at, guys and girls who are long short equity managers are coming in and saying, wait, we want to start looking at corporate debt, or we want to start looking at distressed debt. And to me, as an investor, I'm afraid of that, right? Because I don't expect the guy or girl who I hire to be a long short equity person to be buying corporate debt. So I think people are going to want to look at that section. And then the third item that they're going to want to look at is their service providers. I was on a board meeting earlier today with one of my funds, and we were discussing how great their administrator was. I happened to have a call with the administrator yesterday, and the person was telling me, look, no layoffs, no pay cuts, operations went through a difficult period when they first sort of moved into working from home, but they handled it by, literally flying in 500 laptops and hotspots and whatnot, so people can work from home if they didn't have the capability to do so in a secure environment. And I think, what investors are going to be looking for is, did the audit get done on time? Are the taxes being filed on time? Is the administrator striking the NAV on time? Are they making any changes to the legal documents? So they're going to want to look at, I think, Kelly, those, Kelly and Jen, sorry, those three
Yeah.
things
Yeah.
during this period. And I'll tell you, I think that due diligence as we know it is going to be forever changed, similar to the way I think that working from home has going to be forever changed in light of this pandemic. I think that, people used to joke that the reason there are not a lot of hedge fund managers in Cairo and in Jerusalem is because it's too hard to go do a due diligence trip there, right? It's like, it's too far, right, to go. And so, but now what we're learning is you can do due diligence trips from New York into Chicago, into Abu Dhabi, to Singapore, and really gather the information. I do think that you'll see a lot of video due diligence meetings going forward, and I think it's a positive thing. I think that gives people the ability to perhaps meet more managers, get in front of more emerging managers, and really see and without touching the organization. So I think that's where we're going. I think that's sort of where we are, and I think it's where we're going. And I don't see us moving back to the way it was, 6, 7, 8 weeks ago.
And from what you're seeing and hearing, are investors embracing virtual meetings? Do you think that's going to be something that they will embrace and will accept, because that is very different than in person, but I mean, that's really the only other alternative at the moment.
Yeah, so I think the answer to that is yes. They have no choice, and the only way to make new allocations or uncover potential investment opportunities is to do it like you said. They have no choice. They have to do it this way, and I think the answer is going to be if those funds that they made allocations to or continued to allocate to during this difficult period did well or perform the way they were expected to perform, then I think the industry will continue to have virtual due diligence meetings. Now, it doesn't mean that you're not going to have people aren't going to still do trips, but personally, I don't think due diligence trips are going to start up till early 2021. I think you may have some of these big sort of speed dating conferences really not exist any longer. And I think you'll see people get on the road, but I think it'll be much more structured, much more, I don't want to say sophisticated, but much more structured to go to pockets. But I think people will leverage technology in a way that is really valuable. The other issue is, and this is sort of the weird side of the coin, is that if you're a large endowment, you're a large pension plan, or your family office, you are looking at your budgets, right? And you're saying, well, my people are working from home. My people are able to do due diligence. My people are able to allocate assets. My people are able to redeem if I have to, right? Or add subscriptions, right? Add to the subscription. They're doing that by home. They're using technology. What do I need to put them on the road for?
Mm-hmm.
You know what I mean? And the person who runs that investment office can go back to his or her boss and say, look, last year we budgeted $150,000 for travel and to go to 5 conferences. Well, guess what? We can cut that budget by $50,000 or $100,000, and we're not, and people aren't going to need to go anywhere, and we're going to be able to do it. I think that's what you're going to see. I think you'll see a lot of that going on. You definitely see that, in the corporate world, where you're hearing about, I don't want to say travel bans, but travel moratoriums. You're hearing about people not wanting to spend money on sponsoring conferences, and so I think that will leak into the investor world, and we are going to continue to see. We are going to continue to see these types of due diligence meetings.
Perfect. I think that's an optimistic outlook for this, and a realistic one. And with that, I found it interesting. I was reading from a recent survey conducted by Prequin, specifically in that the article that almost 75% of fund managers believed that their business operations would return to normal before COVID-19 within a year, and only 3% believed the impact and resulting effects would last beyond 2 years. Kelly and Dan, I'd like to hear from you both. From what you're seeing with this dramatic shift in such a short period of time, with really an uncertainty still in the air, is 1 year reasonable to expect, or is it ever going to be, a pre-pandemic bounce back in this new environment?
Kelly, you want to take that one first?
Sure. Honestly, I think that's really aggressive. I don't think we're going to see exactly what we saw before. I think these black swan events have a way of changing things forever. It's almost like an industrial revolution of sorts, is the way I'm seeing it. And I also think sometimes people tend to invest in what they know. So the travel industry was doing really well. And I think you had a lot of people in business and finance and in many other industries fueling that. And all of a sudden the bottom fell out. And now there's, retracting from that as well. And although I don't do the investing, I can see just how consumer behaviors influence that, and consumer behavior is going to be forever changed. I think if you look at it sort of like, we'll always take our shoes off at the airport now after 9/11, and we expect extra levels of security and TSA officers. And when we go into a building in Manhattan or in Miami or in any other metropolitan city, we should probably give ourselves an extra 10 to 15 minutes for security. I think that you'll have various sort of components layered into the changes that are happening. And to elaborate on the working from home, I think that people at the top levels of organizations have realized that in a short matter of time that humans are adaptable, and that maybe it takes a week, maybe it takes a month, but they get there. And when they're there, it's not so easy to go back to what it was before. So in some ways, there's shifts that I believe are never going to be the same.
I 100% agree. I 100% agree with you, Kelly. I think that you're going to see. I'm sure that Preqin data that you're quoting is correct. That because Preqin's a legitimate, great organization, but I would wonder if they did that survey today, if they thought that they get the same numbers. We're hearing that a lot of the funds in New York in particular have already started thinking about how to sublet space to not reduce headcount, but reduce physical headcount in Manhattan. I think you're going to have a lot of people in big metropolitan areas, like Kelly was saying, say, I don't need to go back to the office anytime soon. I don't want to go back to the office anytime soon, and I'm afraid to go back to the office anytime soon. And by anytime soon, I'm not talking about June. I'm talking December. I'm talking January. I think that it's very scary for a lot of people, specifically those who need to go to the office using mass transit. Those people who work in, you work in a building in Midtown Manhattan or downtown Miami or downtown San Francisco. There's 50, 60,000 people going in and out of that building on on a daily basis. And, why do you need to be put at risk? I can say that you probably needed to be put at risk, 20 years ago or 19 years ago when we had this situations like with the World Trade Center, because you couldn't work from your house, right? You couldn't trade bonds from your house if you were working at a brokerage firm, or you couldn't manage assets if you were at a hedge fund. Today, everybody can do that. Everybody can work from home, and you're only limited to the power of your internet connection. And I think we've seen that most of the internet providers, although mine, funnily enough, today is really bad, but have been pretty strong. And so I also think there's sort of a human element to this, that if you run a fund or you run an organization in Midtown Manhattan or downtown Boston, Miami, et cetera, and your employees say, look, I don't want to come home. I don't want to come in. Well, you can't force them to come in. And they've proven, presumably, that over the last 6-10 weeks that they can get the job done from their house. So you're going to I would assume people are going to let them work from home. And then what you're going to do is when your lease comes up, instead of having 10,000 square feet, you're going to have 5,000 square feet. So I think this has a detrimental effect on the real estate market in major metropolitan areas. And I think that that's going to happen more quickly than people realize. But I also think there's a real interesting boost to non-metropolitan areas. So we're based, as you know, in Coral Springs, Florida. The biggest building in Coral Springs, Florida is probably 6 stories high. I can't imagine that any of the buildings in Coral Springs, Florida have more than 1,000 people in them. If that's probably big, right? I mean, they probably have a couple hundred. I think you're going to see pockets of real estate, particularly low rise, commercial properties. You'll see people move out of Manhattan, set up shop in suburbs of New York and New Jersey. You'll set up suburbs of Miami. set up suburbs of LA. I don't really know what the suburbs of LA is, but places like that. I think that's what you're going to see. But no, I don't see, especially to really answer your question head on, but especially if you look at Midtown Manhattan, downtown LA, downtown San Francisco, Chicago, I don't think people are going to get back into their office till the end of the year, if at earliest. That's just my
Right.
take from what I'm hearing, and
Yeah.
I think,
I think that most people are hearing along those lines. And I think that, like Kelly stated, investors are going to really be more observant and more critical on how these managers are adapting. Did they adapt? Do they have this old school mentality, of sitting at a desk or are they going to be innovative? Are they going to be prepared for what's next and be able to adapt to those changes and those trends that may come from this? It's not in my mind so much the getting back to pre-COVID-19. It's how are you going to be ready, or how are you going to now adapt or did adapt to this situation and environment to keep functioning.
yeah, I think that's right, Jen. I think that's right. And I think that if you're a manager, whether you're established or an emerging manager, that's operating, obviously not someone who's putting a book together and launching in a few weeks. But if you're a manager and an investor comes in and sees that you haven't been able to adapt to this new environment, and you are thinking about being an old school manager, sitting at a desk or not, I think they're going to give pause to that. I think they're going to be afraid of that because, look, the one thing that we've learned out of this whole thing is that people are able to adapt. I know where I live. All the restaurants are doing curbside pickup. They're most of the, stores are doing curbside pickup. People have, I had a barber come to my house and cut mine and my son's hair the other day. People have figured out ways to adapt and deal with a very bad situation, clearly. And I think money managers, hedge fund managers, PE managers need to be to prove that they've done the same. And I think that's what's going to, investors who don't see that those organizations adapting are going to say, look, we're going to find one that does or has.
Mm-hmm. Yeah, no,
I agree.
And with that, kind of switching gears a little with you, Kelly, when I hear or I talk or whatever it may be about PR, I know that sometimes there's this pause and hesitation given, the rules that surround being able to advertise and solicit. And I really want to hear from your experience in the industry, working alongside investors and being in PR and starting your own firm. Can you share a bit more about how fund managers can benefit, especially in this new environment, from press and media exposure by engaging a public relations agent such as yourself, while still remaining compliant, with the SEC's regulations that they have in place?
Absolutely. Well, first and foremost, there's absolutely no shortage of information right now, but there is a shortage of good information. It's getting harder and harder to come by because there's so many stories in the news and so much misinformation. So at times of uncertainty, I think that really good investment managers have the chance to elevate their brand and their reputation, which is key. And really what PR is reputation management. And sometimes if I think of it, I look at myself as a reputation manager. The goal of PR is always to raise awareness, and it's through consistent messaging. And a good public relations program can be carefully strategized and executed by employing a plan that makes really good sense, designed to reach audiences that would move the needle, such as potential investors and decision makers. So I think what you have to do is figure out a way to get in front of those people and do it in the best way possible. And having worked at Bank of America during the time of the global settlement, I learned all about compliance and how to stay compliant. And I worked, in tandem with the actual compliance department and legal, because I really think that PR and legal can work side by side, because really, what legal is doing is checking. And I think any good PR person will be very careful in what they can say. So when I work with clients, for instance, I always ask them, what information are you giving me right now that you have not put out yet? I can't pitch anything that's, not for the public domain. I can't pitch anything that might, hurt you or hurt your competitors or your customers, or in any way. So what we try to do really is take information that's already publicly available, but make it in and package it in a way that's more useful. So,
And I
you
love,
know,
you know,
yeah.
that comment about, reputation manager. I talk with these managers. I say, your investment management firm is your baby. Treat it like your
Yes.
baby. Protect it. Protect the image, the brand, the reputation. Like, that is going to follow you. That is your record. That is everything, that you're putting this on, is that investment advisory firm. And if it doesn't have that high level, sophisticated reputation, good luck attracting investors for future funds, because
Oh,
they're going to look
absolutely.
towards.
No, I mean, and if you fast forward to today and you look, like I said, like the public is thirsty for knowledge, but the program that works is one that operates within the parameters set forth by the governing authority, such as the SEC, FINRA, and any others. And what you do is you operate through selected and trusted spokespeople who can honestly own the various narratives, and in order to showcase what your knowledge is. So really, I mean, in short, PR is another form of sales, but it's one that it's done right. It provides essentially a third party, endorsement that's needed to propel forward in an overcrowded marketplace. So I think what's important is getting your message out there, getting the right message out there, and being visible. I mean, I know
Yes.
Dan can attest to this too. I mean, when I started, I worked with a hedge fund around the year 2000, which sounds like so many years ago when I say it that way. But and I will say, when I worked at a fund, it was so important for everybody to have this quiet reputation. People knew of these certain hedge funds, and they knew of certain managers, and it was like, wow, you could work for him or you could work for her. And there was not really a lot of advertising. It was a lot of outward, touting your message to the public, but in a very quiet way and through your employees. People who were bigwigs in the industry got a job at that particular fund, and it was notable, for instance.
And
And
oh, go ahead.
no, go ahead.
I was just going to say, I'm sure, again, Dan can agree, along with you, that not just hiring somebody to protect your reputation, but hiring a PR firm, which this is so critical, I think, that knows the investment fund space, that knows the requirements that are
Yes.
there, because I guarantee, and I tell people this, go to the SEC, look at their, judgments, look at what they've, really laid down the law. And some of these, have these third party PRs that get drug into it because they don't have any clue what they should or shouldn't be doing in terms of protecting their client. And so if you hire a PR that really has no idea, like you said, what can and can't be put out there, you're going to be in hot water, before you
Oh,
blink.
absolutely. And what really, I mean, honestly, like what changed from this whole, kind of word of mouth, the global settlement in 2003 really changed a lot of things, because it wasn't just word of mouth. It was, fund managers talking directly to investor relations people. And, there had to be some form of public dissemination of information. And I really think that was the first and the real game changer. And then people started slowly to want to get their message out in a calculated fashion. And to do that, like, the secretive nature of the business really kind of became outdated. And so having a program in place to, put the information that you wanted out there about the wins that you're getting in an organized manner and in a compliant manner, was really needed to cement the reputation.
Right. Dan, did you have any follow-up? I know we kept saying, Dan will agree.
Well,
Yeah,
I,
no,
Maybe
I'm
you
hoping
won't,
he
but here's
does.
your
Because
chance.
no, first of all, I firmly agree. And I think that as we talked about at the beginning of this program, that, PR and marketing, and not marketing just to raise assets, but marketing to get the brand out there, to get the message out there, are extremely important. And Jen, what you said about the SEC website and checking it and working with people who understand, SEC regulation, FINRA regulation, CFTC regulation, and obviously if you're outside of the U.S., European and Asian regulations is really mission critical. And you can't, just like you hire a lawyer who has an expertise like you guys in setting, in writing documents and building organizations, and you hire an administrator who focuses on funds that the strategy you're doing. You need to hire a PR person who's going to, who has the experience in the space, who understands the media in the space, who understands how to create messages that will resonate with the media and it will resonate with potential investors, and to do it all within the right regulatory framework. And I think that's one of the things that, is really important and something that's often overlooked. And, again, it goes back to this whole idea that most people who start these businesses or are focused on being getting an emerging manager shop up and running, have the false idea that if you build it, they will come. And we know that's not true. And the amount of work and effort that goes into, getting the documents done and mastering the strategy, the same amount of work and effort, if not more, needs to go into marketing and PR. Because without getting that message out there in the right regulatory framework, you will not, you won't get any gasoline to run that engine, as I said before,
Yeah.
I love that.
Yeah, absolutely.
Well, listen, I've written that, and I think you mentioned some of my books earlier.
Yes.
I've written that. There's certain things that if none of you've read my books, I encourage you to buy them all because I have to pay for my kids' college. But but I say the same thing in a lot of them over and over again, and that's one of my favorite analogies is to use the gas and the engine. And the other one is about zigging and zagging. But anyway, I really think those ways. I really think about that all the time.
Absolutely. And it's so important to educate yourself as a manager on all avenues on what you'll need to build a team and be successful. And along those lines, taking the external exposure with PR out of it, Kelly, how does PR and how do you assist, the fund managers from an internal approach, helping them internally build their brand and their story and what they do to come to external fruition?
Sure. Well, I always felt like the most important part of the PR program begins internally, because it starts with choosing the right spokespeople to really shepherd the firm's messages. So coordinated messages throughout an organization is imperative, because your employees should be on the same wavelength, because essentially they're your word of mouth and they're talking to friends, and you don't know who they know. But if they have the right, elevator pitch, if they know the right, the way to talk about the company that they work for, it's imperative. So, we really do at my firm everything that you mentioned above. And above all, I think that interview prep is really important. And right after, finding the right spokesperson, having the right pitch, having the right message, there's a lot of work that goes into that. But the preparation is important, because we want to help our clients learn to extract the most important messages that they want to share in a public domain. And we want to help them ensure that all those messages are in line with any regulatory body. But everything, again, always comes down to the intention of elevating the firm's reputation, elevating the executive's reputation, but we have to do it in a careful way. And so everything that you say is certainly something that we do. I think people don't realize how much goes into public relations. You know, when you see someone on Fox News, or you see somebody in mentioned in an article, there is likely a lot of work to get to that point, a lot of pitching, a lot of identifying who the right reporters are, why those people are the right reporters, and so forth. So when you see, you'll start seeing things differently as you realize that, you know, even celebrities, you'll start realizing that they're in these publications not just because they're so interesting, but because they have somebody who's pushing that and to make it happen.
Kelly, you know, you've assisted us in some PR in the past and currently, and I never realized, you know, how thorough a good PR really is. Where, you know, you know, you'd give a sheet of that, you know, the journalist and their background and, you know, talking points, and then you'd come to the interviews, or, you know, you'd be on the calls and you'd make sure that they flowed the way that they should, and it was such a high level and also detailed approach that it really opened up, I think, my eyes in terms of how critical and important PR really can be to promoting and, like you said, protecting a reputation, and being really involved in that process.
Absolutely. I mean, we always, you know, when I work with clients, I want to see them in places that would help them with their own customers, with their own company, and, you know, see them as thought leaders, really. And I think that that's what's important, is because there's so much talent, and it's just a matter of extracting the right information and telling the story.
Yes. Yeah, absolutely. Um, Kelly and Dan, on this, I want to get, you know, from both of your perspectives. I guess it's a couple of loaded question for
Right.
you with a couple of points, but what industries do you see, you know, investors are looking at now and following for managers that are in industries or investing in industries, you know, that are suffering? What can they do in terms of branding and public exposure, or providers that really could potentially aid in a positive impact um, that they can take, you know, to help, I guess, make up for the past several months or several weeks, you know, of downside. Dan, if you want
Yeah,
to.
yeah. Why
Yeah,
don't you take that
you,
first?
you know,
Yeah.
look, so I think there's a lot of things people can do. I think the first thing is you need to communicate with your investors. If things are bad, or things have not gone the way you wanted them to, I think the worst thing you could do is hide under a rock. I think you need to be in front of people. You should have already been in front of people, quite frankly, and telling them what's going on, and explaining to them, like, look, why you have conviction in your strategy, you have conviction in the, you know, the companies you have made investments in, and I think that's the first thing managers need to be thinking about right now, and they really need to be on top of that on a very consistent basis. In terms of industries, you know, one of the things that people are talking about is, you know, where does the travel industry go from here? You know, and is there an opportunity to buy these companies very, very cheap? You know, particularly the cruise lines, you know, a lot of the hotel industries, those kind of hotel names, I should say. So I think there's a lot of focus on those types of things. That, you know, clearly there's a great article in the FT today about, you know, the interest in all these biotech companies who are allegedly working on solving the COVID crisis, right? Whether it's a vaccine, whether it's a treatment, whatever. And so there's, you know, I think there's a lot of that going on. But I think the most important thing for an emerging manager to be doing right now is when they're communicating with their investors and potential investors, is say, look, we know there's a crisis. We know there's been market dislocation, extreme volatility. The economy is in deep, you know, in a deep issue, and having big problems. And what we're doing is staying. We believe in our strategy. We believe in the way we make investments. We're adapting, obviously, our methodology or our research to deal with these issues that are affecting the globe. But we have the skills, the tools, and the means to deliver the returns that you expected from us when you gave us money, or expect from us when you are doing your due diligence on us. And I think that's what really managers need to be thinking about right now. And I think the bigger concern is managers who are afraid that they're going to lose their business or they're going to have issues. And they start looking outside of their wheelhouse, and whether it's, like I said a minute ago, a long short equity guy or girl who's now going to buy distressed corporate debt, that doesn't work. And I think investors are going to get hip to that, and it's not going to end well for those managers. So I think that's really what managers should be thinking about in the industries that they've been thinking about, that we're hearing and seeing. Sure.
I agree with you, Dan. And I think if any manager took a 180, I think that would almost scare people more, because you're hired for your expertise and a certain discipline. And I think, if you're an equity manager switching over to debt, I could just hire a debt manager, right?
Right.
I mean,
Sure.
so I think and you're right. I think what it comes down to is just, clear communication and owning the fact that, this is not the same as it was on March 12th. I always say that because March 13th, I really feel like was the last day of life changing. I know for myself with children, that was the last day they were in school. And, I look at it as March 12th was a different world, and we still didn't really know. And then all of a sudden the 13th came. We were supposed to work from home for 2 weeks with the kids, and then they never went back. So I think that says something. And it's, I think what we have to do though is adapt with that and walk into the tunnel. And we might not see the light right away because we don't know what it's going to be and how this is going to unfold. But again, like, while it's a very difficult and trying time, there will be things, as we noted earlier, that are going to change drastically as a result of this, and probably for the long term.
Yeah, I agree.
Absolutely. Well, I appreciate beyond words both of you being here. And do either of you have any finishing or wrap up thoughts you want to get out there or share before we?
I want to say one thing, and that's the hedge fund industry, the private equity fund industry has gone through things like this before. Granted, it's not been as devastating as it has been now, but the industry is strong. The industry will survive. New funds will launch. Investors will continue to allocate assets to these strategies and structures. And, if you read the popular press, before you know it, there's going to be tons of articles. Oh, the hedge fund industry is dead, and the hedge fund, private equity is overbought, and blah, 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 blah. That's all nonsense. Yes, there may be a dip in the next few months, maybe even a year, but this industry is not going away. The alternative funds industry is not going away. And anybody who's betting that that's going to happen is taking the losing side of a bet.
Absolutely.
I
Kelly,
agree.
anything?
I would just say, communicate clearly with the people who have hired you, with the people who are within your industry, especially your employees. Just stay on top of the news, whether it's, sending out an internal communication once a month and, giving an update. It's, communication puts people's minds at ease, and it makes them want to continue, working hard for your organization or working with your organization. I think it is the time to put those communication plans in place that you may have neglected earlier.
Right. Yeah. And along both of those lines, I think be optimistic, keep, the glass half full, or in my case, the wine glass half full. Innovative, but be realistic. Don't put blinders on to what's going on. Communicate, be responsive, be aware, and prepared to answer questions that you may have never even heard before from investors, because those questions may change. But in the end, I agree. I think that no, we're not going anywhere. Managers aren't going anywhere. Investors aren't going anywhere. It's just part of our economy globally. And so I just want to again say thank you to you both. Like I mentioned, along with this, there'll be your contact information to reach out to both Dan and Kelly and follow up. And I would encourage going to hedgeanswers.com, because you have just a plethora of great resources you provide there. And I think that, you know, somebody that's willing to do that, you know, I think it's worth going and looking at what you have to offer. And Kelly, same with you. I'd encourage anybody to reach out to either of you to follow up on the discussion if they see necessary or make sense. So again, thank you both. Really
Thank you.
appreciate it.
Stay healthy.
Thank you. Exactly. Stay healthy. Take care.
Bye-bye.
Bye-bye.